Okay, I think we're all well placed according to the images. Thank you. I'd like to just first of all thank the Arab Federation of Capital Markets for this kind invitation to moderate this very timely panel, and for all of our cooperation over the years. I'd just like to present our esteemed panelists. To my direct left is Bashar Al-Natoor, Managing Director and Global Head of Islamic Finance at Fitch Ratings. To his left is Norhaziki Abdul Halim, Head of Shariah Governance at Crédit Agricole Bank. To his left is Mohammed Dawood, Managing Director, Middle East, North Africa, Turkey, Head of Islamic Finance at HSBC Bank. And Mustafa Adil, Head of Islamic Finance MENAT at the London Stock Exchange Group. We'll start with a wise man, Mr. Bashar, for a broad overview, please, of the Islamic finance sector in the region in particular. But if you can mention some issues along with FinTech, as we're going in this conversation to marry FinTech and Islamic finance.
Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. I think this topic is important.
Okay, I hope you can hear me. I think this topic is important and timely because at the end of the day, you are talking about a trend that is definitely evolving and has been evolving. And the region is in various stages of adoption when it comes to FinTech and Islamic finance. So maybe let me just put it in the right perspective. It has three dimensions. So the digitalization and digital assets and FinTech has a global trend and developing in various stages. I'm not going to go into that. So you have the cryptocurrencies, you have the digital assets, you have the blockchain, and how is that impacting the financial industry. But I'll zoom into the Arab countries and OIC countries where Islamic finance is there. And here you have a big gap between some countries. So you have the countries that have the financial capabilities and financial infrastructure and communication and connectivity infrastructure that allows them to pursue such initiatives. And mainly these countries are in the GCC and few outside there. So the first thing is, do we have an infrastructure that can cater for digitization, communication, connectivity, legislation that can allow you to have a digital assets? That's the starting point. I'm not talking yet Islamic finance here. So just to be able to enter the door, you need to have that. Because digitization is connectivity, which is key to anything that we do. Now, after seeing that, you need to go the extra mile for Islamic finance. So do you have a regulatory body that allows you to operate such initiatives or even other initiatives in a Sharia compliant way? And the answer in many countries is no, actually. Yes, we have in the GCC a good sector when it comes to the traditional Islamic finance. So Islamic banks in the GCC are really, I mean, in Saudi Arabia, more than 84% of financing is Islamic finance. In Kuwait, almost 50% of the banking sector is Islamic banks. Qatar and UAE, you're talking between 28 to 29 of the banking system being Islamic finance. So it is there. And Islamic banks on the traditional FinTech, they are competing in a similar footing to conventional one. When I say traditional FinTech, I'm talking about online banking, I'm talking about digital banking, and the availability of branches that you can do with minimum interaction, i.e. using these initiatives. But if I go to the more exotic FinTech, so digital currencies, digital assets, that is at a very early stage. We've seen some initiatives in the GCC just to have the regulations to kickstart that process, let alone be it Islamic finance or not. So I would say you need to have willingness and ability. Some countries have the priority of FinTech and digitization high on their agenda, and they are able to pursue it because they have an infrastructure that can support it from a technology point of view, from a regulatory point of view, and they have also the money power to pursue it. Some other countries are in the Arab world, they would like to pursue that, but they don't have the ability. Neither, in some cases, not the infrastructure, not the monetary power behind it, and that will weaken the willingness. So it's at the varying stages, and once you have that built in, you need to go the extra mile to have these initiatives Sharia compliant. So that's a quick overview.
The bar is high. It sounds like Bashar, and there's quite a lot to do, and it's quite varied, and it sounds like something where not standardization, but a kind of a common approach would perhaps help. If we can shift over perhaps a bit more where Islamic finance is best known, which is sort of in capital markets, to Dawood. Digitalization is taking hold to some extent. Dawood, would you give a quick overview, please, or an overview of what's happening in the Islamic capital markets in the region, and drawing in FinTech where you can?
Sure, no, absolutely. And good morning, everybody, and it's a great honor to be here today. It's a really exciting time in the Islamic capital market space. If you look at Sukuk as a product, has only really been around just over 20 years. But I think in that short time, we've seen tremendous strides being taken. So about 4 or 5 years ago, the issuance volumes were relatively modest. They would account for somewhere between $10 to $12 billion. They would be roughly about 20% of the volume of here in the GCC. And it was very much a sort of niche product. And those names that would issue would be those names that could only issue in Sukuk format. Now, over the last 4 or 5 years, I think we've seen tremendous developments taking place in this product. So last year, issuance volumes almost touching $50 billion. We've seen issuers outside, corporates outside the region issuing. We've seen a big development of issuers here within the region, not only just the banks, not only the sovereigns. We're seeing high-grade names. We're seeing project Sukuk being done. The first dollar project Sukuk was done last year, which is a very exciting initiative because Islamic finance is all about assets and asset financing, so it's very close to that. We've seen the ESG agenda also being actively being promoted when it comes to Islamic finance. I would say there is, and Mustafa will talk about that, but I would say that there's much more that needs to be done. So the market is broadening, the market is deepening, its appeal is very real. So there are some very real, tangible benefits if you are issuing Sukuk format. If you go sub-investment grade, the pricing or the savings that you can get can be as high as 0.5%, which is very significant. If you're high grade, it can be as much as up to 10 basis points less. And what's very interesting, the sort of some of the feedback that we've seen, particularly for the likes of the big asset managers, the likes of your BlackRocks, your PIMCOs, others, when they come to the region and when they come and meet with the players such as yourselves in the capital market space, their suggestion is that, in the region, and we do have a number of sub-investment grade names in the region, their advice is that these names should only issue in Sukuk format because the liquidity is much deeper, it's much better, and they feel it's much more efficient for them to do so. So I think the appeal of this instrument is clearly glowing. Now, as it comes to FinTech, I do believe that there's much more work that needs to be done. Certainly FinTech, I think, can play or blockchain can play a key role in helping to speed up the execution times. These trades do take a long time to execute. So I think technology, let's take full advantage of technology to help reduce the time to market. I think the other big element is Sukuk buyers traditionally have been the big investors. And we haven't really yet filtered down to the retail investor base. The retail investor base is where there are still very significant pools of liquidity there, and that's really where we need to target. Now, the way that Sukuk and these instruments are currently structured is that the minimum denominations tend to be quite high, around $200,000, which means that typically your institutional investors, your banks, your fund managers, your insurance companies, and some PBs are buying. Now, what we have seen of late over the last year or two is much more fintechs looking at tokenization. So being able to come in and being able to sort of break down those denominations to allow for much more retail participation. I think that's a hugely important development. It will certainly add on, we believe, much more liquidity to the market, and it will draw in a much bigger pool of investors who hitherto have not had access to that. So I think the combination of technology, blockchain, all of these things, I think will be a welcome addition to help add much more depth and scope to the market.
Thank you, Mohammed. You dropped a number of things that I think we'll return to. You mentioned tangible benefits, which makes me think about tangible assets as well, which is a debate we'll get onto, and as well the debate around retail and investor protection as well, we'll return to. But if we can just pass on to Mustafa, and I think you're going to speak about one of the key sources about sustainability and the sort of the interaction between sustainable finance, sustainable objectives, and sukuk and Islamic finance more broadly.
Yeah, no, thank you very much, Michael, for the question. And I think, we're all aware that sustainability is probably the most significant trend or theme that is, working across the entire financial sector right now. Whichever segment of the financial sector you operate in, sustainability is a key component of your strategy going forward today. I think what is unique with Islamic finance is that sustainability is very, very deeply entrenched with the objectives of Islamic finance and with how Islamic finance started. So, when we look at the emergence of modern Islamic finance, which was about 40 years ago or 45 years ago, it was a very, very unique concept, to create a financial sector that not only avoids interest, which is considered to be an unethical business activity in our paradigm, but also avoiding any harmful industries, any industries that could be detrimental to society, to avoid synthetic transactions that create, volatility or vulnerability in the financial sector, to have transactions that are aligned with real assets or economic activity that is for the betterment. So that was quite a revolutionary concept within financial services back when it started about 40 years ago. But today, we understand that, that measure is not sufficient to capture the impact that we want to achieve. And that's why Islamic finance has had to embrace new sustainability concepts in how it evolves. It's not sufficient simply to do negative screening anymore. You have to positively measure the impact of the activities that you're doing. And that is, something that is being disseminated within Islamic finance across every aspect of it. And there's many stakeholders that are driving it. I think the regulators are playing a very, very significant role. You have the likes of Bank Negara Malaysia, the central bank in Malaysia, that introduced their value-based intermediation initiative a few years ago, where Islamic banks in particular, separate from conventional, were expected to showcase the positive impact of their activities across their financing activities, across their investment activities, and across their operational activities, and to make separate disclosures above and beyond what conventional has to do in that space. Recently, you had the higher Shariah authority in the UAE launch sustainability guidelines in COP28 last year, that go above and beyond what the central bank has issued in terms of sustainability rules for the banking sector. And they argued that sustainability is not just something that aligns with maqasid al-Shariah, which is objectives of Shariah, which is a very broad concept, but, and I don't want to get too technical, but their position was that it is a matter of fiqh, that you have to incorporate sustainability considerations within your activities, which makes it much more susceptible and gives much more power to the Sharia board and the Sharia governance team in how they incorporate and interpret that. So you see regulators taking a key role here. You see the likes of the scholars who are driving greater positive screening within the institutions. You see the likes of standard setting bodies like IOFI and IFSB and SIBAFI and others who are incorporating sustainability guidelines for banks to follow, and even reporting guidelines. And I think what's most significant is you see the customers and the investors now embracing sustainability. And like any trend, capital markets is always the first one to feel the impact of it. And we've seen tremendous growth in sustainability-linked sukuk. I mean, the first sustainability-linked sukuk was launched only in 2017, 2018, the first sovereign being Malaysia, and the first corporate being Majid Al Futtaim from the UAE. Since then, we have seen about 75% year-on-year growth to now hitting $13 billion in issuances. And what is more interesting is we as LSEC conducted a survey of many of the leading issuers, arrangers, and institutional investors in the Sukuk space to ask them, how they're incorporating sustainability considerations into their decision making. And what we found was that 2/3 of investors have incorporated sustainability in their decision making. What's even more interesting, 52% are utilizing second-party opinions because they're not just going on what the issuer is claiming, but they're expecting some sort of verification to come in. And most interesting for me was 48% had said that they had rejected or declined making investments in certain issuances, not for any commercial reason, but because they felt the sustainability around that or the ESG considerations around that did not align with what they expect to be there. So you actually see investors making investment decisions around the sustainability, and I think that's only going to grow as the industry embraces the sustainability criteria more and more.
Could I ask you you've mentioned sustainability-linked sukuk, which is great, and it's something that's a relatively new trend. Would you just distinguish between use of proceeds, sukuk, and sustainability-linked, just for the audience?
We do. So the reason I use the term sustainability link instead of green sukuk or other, because the spectrum is very, very broad. In the last 5 years, we have seen green sukuk, which is the most common. We have seen blue sukuk being issued. We have seen certain corporates issue transition sukuk as they transition from a to more net zero procedure. We have seen sukuk in Malaysia that are ESG linked or even SDG linked, where they identify certain sustainable development goals that the sukuk is specifically targeting and criteria for how that is. We have seen instruments where if certain KPIs are being met, then the yield is reduced or the coupon is reduced on that sukuk. So I think, when I talk about sustainability, I would link the use of proceeds instruments as well in there, but it's a much broader term. And the good thing with the sukuk industry is because of the innovation, and this is where standardization hasn't constricted it, but because of the variety of issuances that you have and the different use cases or needs that corporates or sovereigns may need to cater for, you have a lot of flexibility that is there. I'm sure that standardization is going to come, and it's a good thing because we need comparability in the industry, because you cannot have accountability without comparability between different issuers. But I think that this period of development has helped innovation really thrive in the sustainability sukuk space.
Thank you, Mustafa. Juan, you're distinct as the Shariah voice, if I can say, on the panel. As the only Shariah advisor, I think you're well placed to reflect on the Shariah perspective on FinTech in particular, and some of the issues perhaps that have been touched on. At the end of the day, all of these instruments have to pass muster and to be compliant. And perhaps you could also touch base on AOFI activities and AOFI's role.
Okay, thank you, Michael, and thanks my colleague and everyone have covered all the overview of Islamic finance. So before we talk about AOFI first, let me talk about Sharia perspective in the application of FinTech. So we know that the application of FinTech in Islamic finance in general, it is a welcome development, a welcome development in Islamic finance, so long as it observes the requirements, the Sharia requirements of, so long as it observes the Sharia rules and principles. As we know that the basic principle in the Sharia is that the originality is permissibility. The originality is permissible unless otherwise prohibited. الأصل في الأشياء الإباحة الأصل في العادة والمعاملة الصحة حتى يقوم دليل على البطلان والتحريم. So long as if there is no evidence or there is no legal text that prohibit the transaction. And what more is about the Islamic finance? The FinTech. The purpose of the FinTech is to ease the human transaction. And we all know that even in the scripture, it's stated that yuridullahu bikumul yusra wa la yuridu bikumul usra. God wants you to be easy, and God doesn't want you to be difficult. So it is part of the, the application of the FinTech in Islamic finance. Again, it's a welcome development, so long as it observes the Sharia rules and principles. And then the second thing is that, of course, it must observe the Sharia prohibition. I mean the prohibition thing in the Sharia. Yeah, it cannot involve the any kind of interest, any kind of uncertainty, any kind of gambling and whatnot. Yeah, and then at the same time, of course, it must also observe the rules in contract in terms of the condition as well as pillars of the contract. And of course, and the Islamic FinTech as well, it must observe the Islamic ethics in the transaction. So we know that the ultimate objective of the Sharia is to bring the benefits and also to remove all kind of harms and of course difficulties. So in order to be so-called Islamic, so-called to be Islamic, it must observe the Islamic moral principle. Yeah, for example, that the conventional concept that we use in the conventional, in the conventional practice, for example, like full transparency and full disclosure, as well as it must not have any misrepresentation. It must promote justice, fairness, and all of this must be applied also in the Islamic FinTech. And last but not least, of course, in the Islamic FinTech, it must aim at realizing benefits, as I mentioned just now, and also to avoid any harms, any elements of the harm, the jalbul masalih or darul mafasid. So this is among the things when you want to apply the FinTech in Islamic finance, you must observe all these principles. So. Okay, coming back to your question, is there any AOFI guiding principle for the time being? As far as I know, we do not. I haven't come across any recent development from the AOFI, but of course, recently there was a new study. Recently, they said that in terms of there is an agency in Islamic finance to have the Sharia governance. Sharia compliance governance, not only for the application of FinTech in Islamic financial institutions, but also by the FinTech companies, because we know that for most of the FinTech companies, they use the like Islamic P2P and for Islamic financing P2P and Islamic equity crowdfunding. All these things they are not being regulated by the regulator. So this is coming back to your question.
Okay, thank you, Juan. I think you've identified or started identifying some potential, let's say, regulatory gaps which may expose investors or participants to risk. I think we should offer Mr. Bashar, who is a risk expert, to observe and make any comments about, do you see additional risks in your rating, in your rated universe coming from FinTech-related risks that you identify in the rating process?
Definitely, yes. So you're talking about, I cannot go into the detailed risks, but maybe I'll give you the subtitle. So you have an additional regulatory risk, because there is, as we agreed, there is a gap in regulations, and when there is a gap of regulation, that means there is definitely higher uncertainties, which means higher exposure. And also, when there is new regulations, that means many of the institutions need to adapt and adopt to that. And that by itself entails cost and time. So that's an additional type of risk. But on top of that, you'll have an operational risks, depending on the item that you're investing on, so digital assets or digital currencies, or the non-centralized banking. You could have market risk, you could have additional liquidity risk, and you could have eventually have also additional credit risk. So this universe entails definitely a new layer of risks depending on the product, because it's not one product when you're talking about FinTech. But if you're looking at Islamic finance, you have on top of that Sharia compliance risk. And here, although at the face of it, you can, as you correctly said, الأصل في الأشياء الإباحة, so things are being acceptable, but that implementing that on the ground is a big challenge. So the actual thing, if you're looking at the GCC, Islamic banks in the past decade has been growing in a faster pace than conventional one. Now, in adopting, specifically in the GCC, in adopting classical fintech, i.e. online banking, mobile banking, etc., Islamic banks is at par, and they're competing well, and they're maintaining their market share. But if the banking industry or new entries to the finance industry are entering into digital assets, digital sukuk, digital bonds, non-centralized financing, cryptocurrencies, and Islamic banks are still waiting to get the green line for Shariah, which could take time. We've seen that in the banking industry and sukuk. Then they could lose their competitive advantage. And that entails a risk on their position, even in markets where they are actually growing faster. So as you can see, it's a multi-dimensional risk, from credit to liquidity to market operation regulations and even market share.
Perhaps, Mohammed, you touched on digital sukuk and the promise of digital sukuk, perhaps Mustafa as well. It's been discussed over time, but to the extent of take-up, if we were to go back a few years, we might have thought we'd see a bit more of digital sukuk. The promise is there, the logic is there. It's a compelling case. Why haven't we seen more of that?
It's a really good question, Michael. I think in part, I think just due to the regulations, I don't think regulations have really, in a way, sort of kept up with technology, with the pace and speed of adaptation elsewhere. I think that's certainly a key factor. I think the digital technology will clearly, add much disruption to the market. I think disruption is good. It's positive. It helps to shake things up, and it clearly lead to much more innovation. I would argue, really, particularly within the context of the GCC region, we haven't seen much happening yet. That doesn't suggest that nothing has happened at all. I think there are a number of people working on this. I still think it's work in progress. So I think over the course of the next couple of years, I think you'll begin to see everybody is, there's all aspects of finance which is being subject to digitalization. I think we've seen some inroads broadly at the capital markets perspective. I think there's much more that needs to be done on this. But I think it's something that you will see over the course of the next couple of years, particularly, for example, when it comes to aspects like book building, when it comes to the marketing of these trades, getting investors to subscribe to these transactions. I mean, those are quite clunky processes which require investors to feed their orders to banks, and banks feed them on to, there are, technology can do away with many of these intermediaries. Hopefully not the banks who do these trades, but it can certainly help to speeden up processes, reduce time to market, and give access to a much larger, bigger pool of investors. So I'm confident it will happen. What we're seeing in with the adoption of AI and other technologies. So it's just a question of time.
Yeah, I know, Mustafa, but it seems that that the blockchain, there's a sort of an understanding the blockchain has everything to put a full transaction on, but also the classical infrastructure is also improving at the same time. Actually, I think, to be fair, Bashar was...
I think, as Dawood said, it is still not to be felt or seen when it comes to sukuk. But in more developed markets, they are starting to discuss digital inclusion, which is a new concept even in the advanced world, but it's not yet arrived here. Digital inclusion it has to do with being digital could actually allow you to be certified as sustainable or ESG or something more than that. Because if you're addressing the digital gap to do to finance healthcare or education or banking for unbanked population, which is a big part of the OIC country, then it could qualify under one of the SDGs. And I think this is a new concept that could actually accelerate this globally, but it is something that is not yet at a starting phase, even in the Arab world or in the Muslim countries.
Sure. Thank you, Michael. And I wanted to just add on to what Mohammed was saying, and to say that, I agree. The reason we haven't seen the uptake of digital sukuk, at least from our perspective, regulation is a big part of that, right? And, really, the value proposition for fully embracing a digital sukuk lies in expanding your investor base and particularly tapping into the retail investor base, right? And regulators in many markets are very, very concerned about, what type of instruments are available to, vetted investors, sophisticated investors. I think we have seen examples of successful digital sukuk. So in Malaysia, in Indonesia, the sovereign retail sukuk is developed, distributed, and disseminated through digital channels entirely. Any resident, any local can purchase it online, receive the coupons into their account, redeem it online, sell it online. All of that has been created. In the UAE, you have an example with national bonds, which is Sukuk al-Wathani, which is a program that is launched there as well. And similarly, they've created a system where not only can you, purchase sukuk at a very small denomination, receive the coupons, participate in other activities, but they've also created around that debit cards and other instruments as well, where if you have a sukuk holding, you can withdraw cash against that at any ATM or point of disbursement. So there is examples of that, but I think where they've really spread or where they've really created value proposition has been on the retail side, where you make sukuk more accessible to the retail investor. And I just wanted to add also to what Bashar said, is another element of how technology is perceived in the sukuk space is on the transparency and verification side, right? Where it's always been a challenge that, if you issue a sustainable sukuk, is it really sustainable? What is the end impact? How do you measure or track that, right? Things like blockchain can help you track, across the value, across the supply chain or across the activities of an instrument over many years, right? Reporting can be automated. It can be accessible to anybody, creating transparency and creates greater confidence. So I think where technology, particularly things like blockchain, will really be, incorporated by the industry, will be on the verification, tracking, transparency side of things, where data is available to potential investors so they can track the impact of the instruments that they invest in.
Yeah, I think that's a key point, Mustafa. It's all about transparency, and especially if we're going to introduce more retail. It is a legitimate concern that investors be protected. I think, and it is legitimate. And it's a matter of debate where and how to protect retail investors, and also in this region, what are retail? Even the definition of a retail investor is something which is subject to active debate at all the regulatory agencies, and I think it's being approached and is very, very active debate now. I promised we'd come back and talk about assets as well, as this is a perennial debate or challenge in the sukuk market, and specifically about tangibility, which has been a AOFI issue. And do we find now, and really for anyone who would like to comment, adequate assets that can be used within transactions in the region? And this has been posed for certain issuers who are maybe asset-light issuers, issuers which don't have governments now, and which don't have hard or tangible assets that are readily usable. Is that a continuing challenge in designing sukuk and drawing more issuers into the market? Mohammed?
Maybe I'll tackle that first. Yes, look, it clearly is it adds a degree of additional work that needs to be done for these transactions, particularly when you compare, Islamic, which requires much more structuring, much more work, or much more plumbing, if you can call it that, compared to just regular conventional bond issuances. Now, you'll always will find clients out there who will have difficulties. What's very interesting is when you look at sovereigns, for example, we're moving to a world where even within the core emerging markets in many Muslim countries, governments are selling off assets. We do, one is in Malaysia, but the Malaysian government has sold off many assets. And that's a trend that we will probably continue to see as governments need to make fiscal adjustments and changes. Assets will be sold. So this issue will always remain, certainly remain there. The requirement for Sukuk to then particularly address the needs for countries which have large fiscal deficits is always going to be challenging. Finding assets if you're a large emerging market sovereign issuer and you need to raise $3 to $4 billion, which by all accounts is quite normal in markets these days. It does become quite difficult and challenging. So it is an issue. The IOFI, the body that sets the Sharia standards, has raised the bar to 51%. So that that requires much more work to be done. Of late, we've seen newer structures. We've seen sovereign wealth funds access the market. So the last month or two, we've seen the likes of PIF in Saudi Arabia. We've seen Mubadala in the UAE all access. So I think bankers are becoming more creative in terms of coming up with new structures to address some of these issues. But I think it will always remain a challenge for some issues out there in the market, and I don't quite think we've got a ready-made solution yet.
I think if we're talking about standard IOFI 59 and tangibility, the impact of that has been more or less absorbed in the market. I think there are other things that are coming that actually could alter the credit risk profile of Sukuk. Because currently, we rate around 70% of all hard currency Sukuk globally, and around 80% of all hard currency ESG Sukuk globally. And the vast majority of these are actually asset-based. What that means is there is an underlying asset there, but the actual recourse, i.e. the credit risk, to simplify it, lies with the obligor, i.e. the government, the bank, the sovereign wealth fund, or the corporate. There is a draft regulation, and that draft regulation is talking about transferring of assets, actual transfer of assets. Now, if the way that implemented, or how is that implemented, is what we're looking for. If that really is going to translate in transferring actual assets outside the balance sheets of banks and corporates and projects and even sovereigns, then that entails an additional risk and it alters the credit risk profile. That is not the case currently. We are observing that development. That development is first, it's a draft format. If that draft is adopted, we will see which central bank or central government is adopting it and how are they adopting it. If that, it will be assessed on case-by-case basis, and we will see if that has a credit implication or even a significant altering from a credit perspective where we're talking about asset-based to asset-backed, which is a different dimension of risk.
And asset-backed, I mean, is a nascent market. There have not been that many pure asset-backed issues, conventional or Sukuk in the region, and it's a place that we need to develop in to fill the capital market.
And do we have investor appetite even for that? Currently, as you correctly said, we don't have that category significant in the GCC or the Middle East, where the actual recourse is going to rely on the performance of the underlying assets rather than the owner of the assets. So it's a new dimension for the region, not globally, I have to say.
Sure. No, I just wanted to add to that. I completely agree with what Mohammed and Bashar said, but just to kind of articulate how big a challenge it is for some issuers to find assets. There was an example where one of the sovereigns in the region had come to the market about a year ago at the end of Q1 for an issuance that was expected to be a full Sukuk issuance, but because they were not able to find the assets, they had to do 50% Sukuk issuance, 50% conventional bond issuance. And what we found was that the Sukuk was twice as oversubscribed as the bond issuance, and the pricing, the Sukuk was 125 basis points cheaper than the the bond issuance. So there is a real economic impact for these sovereigns, but the challenge is that they're not able to find the assets to be able to fulfill some of the funding needs that they have, and through the Sukuk route. And as was mentioned, with the likes of IOFI and other standard setting bodies who are trying to drive the industry towards a more pure reflective form of what the industry should be, the challenge in some markets is going to increase significantly to be able to find the assets to build the Sukuks around.
Does it remain challenging to issue a Sukuk compared with a conventional?
Well, I'm sure that maybe my colleagues would agree. I don't think we've seen a very strong last year. We've seen an extremely strong quarter Q1 in terms of issuance. So actual impact on issuance currently, despite the geopolitical situation in the region, despite the uncertainties about the interest rates, we've actually seen a very strong pipeline of issuance in Q1. So that's a fact. So it's not impacting. And maybe to put things in perspective, when you're talking about issuance in the GCC, you're talking about between 35 to 40% of total issuance coming out of these markets, it's coming in Sukuk format. So that's a significant one. And that is expected to continue. But if things, Sharia historically, so when Standard 59 was introduced a few years back, it actually paused the market. The market stood still, as you also seen and know. So when these challenges come, they actually impact the issuance and the appetite. The thing is, and I think as Mustafa alluded to, there is an investor appetite. So Islamic investors, specifically Islamic banks, they have the liquidity. They have the appetite to invest in Sukuk if it has the right credit profile. The problem is there is always an evolving environment when it comes to Sharia that it's a moving target. Why am I saying that? Because you achieve a stable list, or you adapt to something, and then something else is introduced. This is why we don't have standardization. It's a moving target, and each time there is a significant Sharia adoption from one of the key stakeholders, it actually put the market almost on pause. And we've seen that happen a few times in the past.
Mindful of the time, I think we should give each panelist a chance for one final bit of input, and I would ask perhaps from the furthest point, Mustafa. A year's time, if we're able to be invited back, let's say, or have a chance to speak, what would you like to see in terms of developments in the market, if you can pick one?
I think technology. I think that there is sufficient, when we talk about sustainability or about digitization or others, there is sufficient headwind behind it. But I think really embracing technology to create greater transparency, to be able to track the impact of the instruments that are in the market, and to bring it closer in line to what the principles of Islamic finance are. I think that would be fantastic development for the industry.
Maybe I can add on to that. I think when Islamic finance was set up, arguably 30, 40, 50 years ago, the focus was on addressing on the needs of certain customers, retail, wholesale, who wanted Islamic product. I think the focus very much has been on commercializing that Islamic finance proposition, but I think it's been done to the detriment of the communities, societies. Islamic finance, I think, one of the criticisms of Islamic finance is it hasn't made the impact on societies and communities that it has. I think with the work being done at a global level around ESG, I think Islamic finance needs to embrace the ESG agenda much more and really help to look at how Islamic finance can penetrate at every level of society, and understand it should really be about impact investing. To what extent can it impact communities, societies, address some of the real challenges such as climate change that our communities and countries are facing?
Hello, I just hope that for the application of Islamic finance, since being a Shariah person, I mean, I hope that all the Shariah scholars, when it comes to the, deciding to the issuing the opinion, Shariah opinions and whatnot, when it comes to the application of FinTech in Islamic finance, they need to be in convergence. They need to be, to sit together to resolve the issues that have been, unending until now. For example, like the application of cryptocurrency as being discussed in the, as what we call it, because cryptocurrency plays a major role in the, as a as a payment system in FinTech. So for the time being, it's become like unending, what we call the issue, where the scholars, they still cannot resolve this issue. I mean, it's like, yeah, we know that the scholars, majority of the scholars, for the time being, they say, they prohibit they forbid the application of the use or the investment or the trade of cryptocurrencies. And some of the scholars as well, for example, in Malaysia, and the Shariah Advisory Council of Central Bank of Malaysia, as well as the Executive Commission, they recently they come up with a how to, not to say something like quite advanced, but they allow the trade and also the investment of cryptocurrencies, the crypto assets in a registered digital assets. So what I mean is that this is still, still unending issue in Islamic finance. At the same time, also, for example, like the other issues in FinTech, like smart contract. There are some also scholars still, they have been, debatable. It's still, the issue is debatable among the scholars. Where is it allowed from the Sharia perspective, the predetermined TNCs and clauses and provisions, whatnot in the contract? Is based because the concept of immutability in the smart contract, what we call it deny or avoid the principle of ihsan, or the charity, or what we call it in Islam. Because in Islam they still, once the contract has been concluded, it's like that. Any contracting party, they don't have right to request for the change, for the alteration of the contract. And the other things like for the other issue, for example, like the scholars still have been discussing in terms of the robo-advisory system, where we know that for the purpose of the investment, for the investment advice in Islamic FinTech, the robo-advisor using the AI, they use not just to make a decision based on the existing standard or the existing Sharia resolution, but at the same time, it is said that it comes to the level of making the Sharia decision that is actually the responsibility of the scholars to do it. So this is among the issues that what I hope. Then I hope that there are some improvement to be done for this thing.
Thank you, Juan.
I'll be objective. I think historically the growth of the Islamic finance, whether on the banking side or the capital market side, has been significant. Potential is huge because the starting point is there. Key drivers are there, so diversification of funding, development of the capital markets development, need for financing, diversification are there. Challenges are also there, and they're huge, whether on standardization of Sharia, whether on adopting digitalization. So if I am to end with something, I think there will always be challenges. Looking for disruption is normal because it could help the industry, but destructive things could also occur that could actually challenge the industry significantly.
Concluding with wise words, once again from Bashar, it just remains then to ask you to show your appreciation, to thank our esteemed panelists for their wonderful observations.